Hi everyone, welcome back to my channel, Entrepreneur Help Desk, where I talk all things about taxes and entrepreneurship. And in today's video, I'm going to be talking about filling out Form W-4 for 2023. Some of you may have remembered I did one for 2022, for those of you who've seen that video, okay? And if you're new to my channel, welcome. Please be sure to subscribe. My name is Tasha. I'm a tax strategist and business coach to small business owners and self-employed individuals across the United States. So let's talk a little bit, a few reasons about why you would want to fill out a new W-4 form. For example, certain life changes may have taken place from last year to this year, okay? Such as maybe you got married or you had a child or whatever, or maybe you're no longer claiming your child as a dependent due to various reasons. Maybe they've moved out or whatever the case may be, you just don't qualify anymore. Maybe they're working and they make too much for you to claim them. There's multiple reasons why a situation like that could happen, but that's one reason. Another reason you may want to fill out a new W-4 form is because maybe not enough taxes were coming out last time, or maybe too much taxes was coming out and you kind of just want to adjust it. And let me let you know, you're more than welcome to change your W-4 form as your level of needs change. Don't think that it's just a one and done. Once you fill it out, at the beginning of the year or whatever, then that's just it. No, if certain things change, you need to fill out a new one, that's totally fine. Okay, so I'm going to share my screen and I'm going to take you to, let's see which my screen. I have so many things up right now. Okay, here we go. Okay. So now let's go here. Oh, go away. Okay. All right. So now here we are, Form W-4. And I'm also going to show you, after I show you Form W-4, I'm also going to show you how to use the withholding estimator on the IRS website, okay, which can kind of help give you an idea of different projections, but I'll go over that in a second. So for right now, let me just show you some things. Okay, so the first thing you want to do with Form W-4, all right, you want to, obviously everything is self-explanatory here. You're going to fill out your first name, your last name, your social security number, your address, okay? And here is where you're going to check off if you're single or you're going to be married filing separately, or you're going to check the box if you're married filing joint, okay? Or if you are a qualifying surviving spouse, unfortunately, okay? And so, or you may be head of household, right? So you're going to check the appropriate box for that. Then, now, honestly, I'm going to be honest. Now, if you want to just keep it so basic and simple and you don't want to overcomplicate things, you honestly can just do that. And then you can come down here, sign, and turn it in. Okay, I'm so serious. Because sometimes doing all this other stuff, which I'm going to quickly go over these steps, it can be very confusing. It can be intimidated, and you may sometimes make a mistake. And so some people just don't want to do all of that, and you can just do that. All right. And then that's fine. Okay. So, but now what I will say is, and oh, I want to say this. If you are a married filing joint, okay, make sure you and your spouse are both filling it out the same. So both of you would make sure that you would want to check married filing joint and just sign, okay? So you can do that. You can just keep it really simple. But let's go over a few things here if you do want to go into a few things and kind of make some additional adjustments. Now, if you notice, step 2, let's see, step 2, multiple jobs. Okay, here's another thing, and I'm sorry to jump around, but it's just that it just dawned on me that if you and your spouse, right, and you both are going to check that box, married filing joint, one other thing you both would want to do is come over here in step 2 on item C and check this box, okay? See where it says if there are only 2 jobs in total, you may check this box. Okay, this is helpful for to make sure that everything is coming out as it should and being withheld for both spouses, okay? And so that's what I would suggest. And then now, if you're like a head of household person, or a single person, but you do have more than one job, you can still check this box, okay? This is a helpful box to check off, okay? Now, let's come down to, now it also says if you have self-employment income, see page 2. Let's just quickly go to page 2. Where are we for self-employed income? They're saying, oh, okay. No, where is it? Oh, self-employed income. Generally, you will owe both income and self-employment taxes on any self-employment income you receive separate from the wages you receive. Okay, so if you want pay, income, and self-employment taxes through withholding from your wages, you should enter the self-employment income on step 4A. Okay, so let's come back up to 4A. All right. And so 4A is where you would put, if you want tax withheld for other income you expect this year that you won't have withholding come from, enter the amount of the other income here. Okay, so this could be like, this is more or less like a projection on your self-employment income. Okay. Because if you could just kind of say how much you may potentially expect to make, but this can kind of be, again, intimidating, maybe it might just, who knows, So another thing you could do to just not bother with that, you can also make estimated tax payments on your self-employment income. Okay, I do want to let you know that. So you don't have to do any of this that they suggest. Okay, they're just giving you a tip, honestly. But what you can do is throughout the year, you can separately make quarterly estimated tax payments on your self-employed income. Okay, so I want to be clear with that. I hope I didn't confuse any of you. All right, so now let's come down. So that was just that part. That step 2 is really more or less about if you have additional income coming in, or if you, from more than one job, or self-employed income, or if it's 2 spouses working in the home. Okay, that's mainly what step 2 is about. Now let's come down to step 3. Okay, now it's pretty self-explanatory. Multiply the number of qualifying children under age 17. Now, let me be clear. They're talking about how old your child is going to be by the end of this year, right? So, for example, if you know your child is turning 18 and they're currently 17, you would not want to put that. You would not want to multiply that child by the $2,000, okay? Because that's what they need to add here, because it's not really clear, okay? They're referring to the age the person is going to be by the end of the year, because that's what they go off of by December 31st of the year. Okay. But as long as they're not going to be over 17, then yes, you can multiply the number of those children by 2,000 and put that amount here. Now, if you have other dependents, now here is where that would come into play. You see the example I just gave. If you know your child is going to be turning 18, you would not multiply them by 2,000. If anything, you would multiply them by $500. Okay, multiply the number of other dependents by $500. So if you know you're still going to be claiming your 18-year-old and beyond or whatever, they would get multiplied by $500, not $2,000. Okay, I hope I made that clear. Now, if you are claiming other people in the home, maybe your parent lives with you, or maybe a relative, or whatever the case may be, again, you would multiply that number of those people by $500. Now, once you total those amounts, you put that here. Okay, and this is what's going to help let your employer know in terms of what they should and shouldn't be withholding, okay, from your check. Now let's come down to step 4, okay? Now, as we already went over 4A, that kind of pertains more or less to self-employed income And so now let's see, B for deductions. If you expect to claim deductions other than the standard deduction and want to reduce your withholding, use the deduction worksheet on page 3. Now, I'm going to tell you, honestly, more and more people no longer qualify to itemize deductions. And that's because when the Tax and Cuts Jobs Act was passed, okay, the standard deduction was raised, and every year the standard deduction increases. Okay, and let me just take a sidebar and explain really quick what the standard deduction is. The standard deduction means that's how much your income is going to be reduced by, like they take it off the top. Okay, it brings down your deductions, whether standard or itemized, helps to reduce your taxable income. Okay, and like I said, most people no longer qualify to itemize, and I don't really want to go off on a rant about that whole thing for this video. Okay, but a lot of you who are homeowners and things like that, I know most of you are pretty pissed off because there's just certain things that no longer qualify on Schedule A anymore, because that's what you were filing when you were itemizing. So now you take the standard. Okay, so now that's the reason why I went into all of that explanation, is because if you, this 4B is only if you expect to itemize. Okay, now let's just go down really quick. I'm not going to go into it, but let's just go down and see. Okay, so step 4B, all right, the deductions worksheet. And this is where you come in and fill out all of this stuff. But as you see, it can begin to get pretty complicated. Even on line 1, they're referring to medical expenses and things like that, which need to be in excess of 7.5% of your income. Okay. Again, you know, if you're not really too savvy with all of this, it can be very confusing. And most likely you're going to be taking the standard deduction anyway. Okay, so you would want to not even bother with all of this. All right. We spoke about the multiple jobs worksheet here. Okay, and this is kind of where you'd come up with that calculation. All right. But again, you know, honestly, guys, it's totally fine if you don't do step 3 and 4 and you just worry about step 1, step 2, sign and keep it moving. Okay. Now, what I also want to say is that sometimes people want to do an extra withholding, which is step 4, item C. Okay. Again, because maybe not enough taxes came out, and like maybe you just want to make sure that, I don't know, that you're not going to owe, or whatever the case may be. So you want extra money being taken out every pay period. That's another option. Okay. But, you know, again, and what I will say is, if you do this and after the first 1 or 2 paychecks it's not working out for you, again, you know, don't let your payroll tell you otherwise. You can certainly fill out a new one at any point in time throughout the year. Okay. So I want to say that. Now, let me show you about the withholding calculator. All right. You're going to go to irs.gov, and in here, just type withholding calculator. Okay. And then you're going to see, here it is, tax withholding estimator. All right, now you're actually going to need your pay stub for this step. Okay, I jotted down some calculations. So for the purpose of this video, I'm going to just show you something, but here we go. Okay, so now let's say we're going to go, all right, you're going to go use tax withholding estimator. Now for this purpose of example, I decided to go with a head of household person making about 91,000 a year. Okay, they have already received like 2 paychecks this year. Okay, and that's, for my example, that's what I'm doing. So we're going to say head of household, and then we're going to say, do you or will you have a job that regularly withholds federal income taxes from your paychecks? Obviously, it's yes. Okay, now this person is not age 65. So we're not going to check that. But all of this, again, is self-explanatory. You would check whatever boxes apply to you. Now, for this purpose, it says, I plan to claim dependents on my tax return. Okay. And I did it for 2 children. Okay. Age 14 and 16, I did for my example. So I put that. All right. Now, how many jobs will you have? This person is going to have 1 job. Describe this source of income. They're only on salary. So we're going to bubble that in. Select what best describes when you earn income from this job. And that's all year. Okay, how frequently? We're going to say every 2 weeks. Now, using your most recent pay stub, when did your most recent pay period end? We're going to say, for the purpose of this video, it was the 20th. Okay, well, yeah, we'll go with the 20th. Maybe they got paid on the 6th and then they get paid on the 20th. All right, now, enter the wage or salary for the pay period is about $3,500. So since there were 2 pay periods so far, the wages year to date will be 7,000. And as you see, they're doing calculations right here based on the information provided. It looks like your expected annual income from this job is about 91,000, correct? And I'm going to say yes. Okay. Now, again, this is where you would need your pay stub because it's going to ask you how much federal taxes were withheld from this pay period. For my example, it was $435. So the 2 amounts come up to $870. Okay. So that's the year to date. Now, select any that apply to you for this job. All right. If you're getting a bonus, if you're not getting bonus, but for this purpose, I'm going to say none of the above applies. And do you have any other income sources or whatever for this purpose? I'm going to say no, none of the above. Okay, now they're asking about other adjustments. As you see, it gets pretty detailed with the questions. You know what I'm saying? It asks you all about if you expect to, write off some student loan interest, if you're going to have an educator expense that only applies to teachers, so again, this can get pretty detailed, but for this example, I'm going to leave all of that blank and I'm going to say next. Now, remember, I spoke to you about standard and itemizing deductions. Most people are not going to qualify there's more people that's not going to qualify to itemize than there is. All right. So see, for 2023, they're already saying your standard deduction, right? It's going to be 20,800. Now you see why I'm saying most people don't qualify. What you're itemizing is most likely, highly unlikely, exceeding this amount as a head of household person. All right. So you're going to take the standard deduction. Now, these are projections. What we're doing here, where this is going to be in relation to our 2023 tax return, which we will be filing next year. Okay. And what I'm helping to show you guys here, this part is all of this right here that we're doing is like a small part of what's called tax planning, okay, which I do tax planning appointments, tax strategy appointments. They're totally separate from tax preparation. Okay, you definitely want to book a tax strategy call with me because I can save you thousands and thousands of dollars in taxes if we plan accordingly. That's what it is. Tax planning is not just for wealthy people. Tax planning is for all income levels. Okay. What I will say is that, especially if like you're a business owner, you definitely need to be calling me so that I can help you strategize with a plan. Those things are priced much differently, but when we're talking about the savings you can get, it's worth the investment. Okay, now back to this example. Okay, so select the itemized deduction that may apply to you. Okay, none of these apply, so we're going to just leave that blank. And now we're going to say next. Okay, now remember I said we're going to go with a 14-year-old child and a 16-year-old child. Okay, enter the age. Your child will be December 31st. Child number 1 is going to be by December 31st, 16. And the second child by December 31st is going to be 14. Okay. So neither one of those ages obviously qualify for child and dependent care. So this is going to remain 0. Okay. earned income credit will not apply to you at $91,000. You're not even going to qualify for that. Now, I'm going to leave all this other stuff blank, but as you see, again, it can get pretty detailed, and you would open up whatever parts you need to help you answer these things properly so that you can know what you can do with your W-4 form, okay? So we're going to just say next. Now look at the results, okay? It's already telling you, it's projecting. If you do not change your withholding, you are likely going to get a refund, okay? Because it's expecting to withhold from your 91,000 based off of what we entered. More than likely, they're going to be withholding a total of about $11,310. Your anticipated tax obligation is supposedly going to be about $5,151. So they're projecting that you may be going to do a refund of $6,159. But here's the thing, and this is where this is why this is a really good tool that they've added, because you might not want to wait to get this $6,159 next year when you file. You may want it in your paycheck now. So this is where they're helping you out. All right. See, you come down here and it says how to adjust your withholding. Okay. So then this is what you would do. You click here. Now you see where it tells you what you need to fill out, right? It tells you in step 1 what you need to do, okay? It tells you in step 2 to check that head of household box. Remember, we did that over here, okay? Then it does tell you in step 3, enter 4799 for credits and other reductions to annual withholding, okay? And so this is where you'd come over. It tells you line 3. Okay, so you'd come over to down here, step 3. Now, I know before I showed you the calculator, I was saying you can leave all of this blank, but now that you've used the calculator and it gave you some numbers to put, now you can come over here and you can just put on line 3, regardless of what's here, okay, you can just put what it told you to put, 4799. You could put that there, okay? And this will help so that you are going to be bringing more money home in your check now instead of waiting to file your taxes next year and get this refund, okay? Now, it can be, now listen, this is not professional tax advice. Yes, I am a tax strategist with clients all across the United States, but I'm not your direct, you're not my client, so this is not financial advice. Check with your own professional. But what I'm saying to you is that, you can play around with this whole thing. You can adjust accordingly. You can, bring more money home now instead of waiting. They even let you print this out, this whole thing, so that, you can just get like a bird's eye view of what's going on. Okay. And this, can be pretty helpful to, your weekly checks or whatever, your bi-weekly checks and throughout the year. All right. So I hope you found this information helpful. You're more than welcome to reach out. I am still accepting for this year a few more clients. Okay. But let me stop sharing my screen. Okay, stop screen share. Okay, so you're more than welcome to give me a call. You can book a consultation. Those tax strategy calls will not really be held in this heavy part of the season because it's very much involved. So I would say if you're interested in getting on that calendar, you should get on the calendar from now for sure. But those calls and sessions will start after we finish the tax season. Okay, I do thank you for watching. Please be sure to subscribe and take care. Bye-bye.